Howdy, everybody. Welcome to Liberty Call. Today is Tuesday, June 24th, 2025. Hope you're having a fantastical day out there in the interwebs. Kind of a stormy day here in Colorado. It was sunny this morning. Then we had a really bad storm come through, I guess about 1, 2 o'clock. And then it just cleared back off again. Now it's humid. Yay. So hope you're having a great day out there. All right. Well, markets roared higher as news of an Israel-Iran ceasefire sent oil prices tumbling and risk appetite soaring. The Dow rallied over 500 points. The S&P 500 climbed 1.1%, and the NASDAQ 100 hit a record high for the first time since February. Treasury yields dipped as the Fed kept its cool, but soft consumer confidence reminds us the clouds haven't completely cleared. So before we break all the news down this afternoon, if you could do me a favor, give me some thumbs up, a like, share, subscribe, follow, and press that darn notification bell. All right, let's get to the markets for today. Dow Jones was up 1.19%, 507 points, closed at 43,089. S&P 500 up 1.11%, 67 points, closed at 6092. The NASDAQ up 1.43%, 281 points, closed at 19,912. The VIX fell 11.85% today. It's at 1748. Canada up 0.41, Brazil up 0.45, and Mexico up 1.15. Headed to Europe, Germany was up 1.6%. The UK was flat, up only 0.01. France up 1.04%, Netherlands up 0.85, Spain up 1.41, Italy up 1.63, Switzerland up 1.13, and Portugal up 0.57. Russian exchanges were red today. The MOEX down 0.52, RTSI down 0.64. And the overnight markets, the Nikkei in Japan was up 1.14%, Australia up 0.95, New Zealand down 0.39. In China, the Shanghai up 1.15, Shenzhen Component up 1.68, China A50 up 1.12, DJ Shanghai flat at 0, Hang Seng up 2.06, and the Taiwan weighted up, down 1.42. All right, so those, I guess the markets are happy that the short 12-day war, as Trump wants to call it. I mean, I'm extremely pissed. He should be impeached for our involvement in this domestic squabble over there in the Middle East. It is not you or I or any taxpayer's problem. And certainly no one in the military needs to get injured or killed or anything from this, from this dispute between, two parties who are not us. All right, well, let's get to the market recap. S&P 500 ends higher on Israel-Iran ceasefire and Powell's remarks. All right, the S&P 500 closed higher Tuesday, supported by easing geopolitical tensions in the Middle East and remarks from Federal Reserve Chair Jerome Powell that kept the door open for future interest rate cuts. Markets rallied after President Donald Trump announced that a ceasefire between Israel and Iran was, quote, now in effect, end quote, raising hopes that the 12-day conflict, which included deadly airstrikes, was over. Oil prices tumbled as the ceasefire reduced concerns over supply disruptions and inflationary pressures. However, doubts lingered about the ceasefire's durability. Yeah, they're going to start lobbing rockets back at each other, I think. Trump criticized both Israel and Iran for violating the agreement within hours of its announcement. Israeli Defense Minister Israel Katz, I wonder if he has any stake in that deli in New York, ordered new strikes on Tehran, citing Iranian missile launches, which Iran denied, accusing Israel of breaching the ceasefire. Meanwhile, Federal Reserve Chair Powell, testifying before Congress, signaled that the Fed is keeping its policy options open despite the Fed's recent hawkish pause. Powell emphasized that, quote, many paths are possible, end quote, for monetary policy, acknowledging uncertainty about the inflationary impact of Trump's tariffs. He stated the central bank would wait for more data before making adjustments, though two Trump-appointed Fed governors have recently suggested rate cuts could come as soon as July. I'm not holding my breath. President Trump, however, continued his aggressive push for rate cuts, urging a 2 to 3 percentage point reduction. Boy, that wouldn't cause any inflation. And calling Powell, quote, a dumb, hard-headed person, end quote, in a social media post. Yeah. Trump, again, there's things I like about him. The fact that he's not a Democrat, even though he is. I mean, he's basically a big government Republican, which is essentially an 80s Democrat at this point. But, banging on Powell about this is, ridiculous, in my opinion. I mean, Lowering rates would, spike inflation and cause more problems that we're still trying to dig our way out of right now. We've had zero deflation on any, goods that the average person buys on a regular basis. Going back to say 2019 prices, haven't even nothing has gone down. So before he wants to open his pie hole and say something negative, I mean, I have my own criticisms of Powell, but Trump is just wrong here. All right, and finishing up in corporate news, Tesla shares extended gains following the launch of its robo-taxi service in Austin, Texas, using a fleet of Model Y vehicles. Chewy stock declined after announcing a $1 billion public offering, partially offset by a 100 million share repurchase plan. And KB Home shares fell after the home builder cut its full year revenue forecast, citing a challenging housing market. Life is challenging, Mr. KB Homes. All right. Next up, got some data, I guess. U.S. consumer confidence weakens on job market worries. All right. U.S. consumer confidence unexpectedly weakened in June as concerns about job availability and economic uncertainty from President Trump's tariffs weighed on household sentiment. The Conference Board's Consumer Confidence Index dropped 5.4 points to 93.0, reversing nearly half of May's sharp gain and missing expectations for an increase to 100. The decline was broad-based, affecting all age groups, income brackets, and political affiliations, with the Republicans showing the steepest drop. Consumers expressed increased anxiety over import duties and showed hesitation about big-ticket purchases. The share of those expecting income gains declined, though current financial conditions remain stable. Notably, only 29.2% of consumers viewed jobs as plentiful, the lowest since March of 2021. Meanwhile, 18.1% said jobs were hard to get. The labor market differential fell to a 4-year low, signaling potential further labor market softening. Combined with the rising unemployment claims, economists expect the jobless rate could tick up to 4.3% in June from the 4.2 in May. 1-year inflation expectations eased to 6% from 6.4, but more consumers expect interest rates to rise, reflecting uncertainty around the Fed's policy path. Fed Chair Powell reiterated the central bank would wait for more data on tariffs' inflationary impact before adjusting rates. While home prices nationally remain stable, demand is weak, inventories are rising, and some overheated markets like parts of Florida face possible price declines. Well, that would only make sense since they were in such a rally for the last couple of years. A separate report showed U.S. house prices dipped 0.4% in April, the first drop since 2022. Despite household caution, spending intentions for dining out and fitness activities rose, while plans for U.S. travel and home purchases fell, reflecting affordability challenges and economic concerns. That makes sense. It looks like we're headed into some sort of a malaise, down market, bear market, black swan event. Who knows what it's actually going to look like? So it's probably not a bad idea that people are spending a little bit less. All right, one more article and then we'll get out of here. This one's from Zero Hedge. Silver price shows what government has done to our money. And this was authored by Mr. Douglas French via the Mises Institute. All right, in a recent Mises article, Mr. Douglas French highlights how Americans misunderstood the root causes of high prices, particularly at the gas pump. While President Trump touts falling gas prices, claiming some places see $1.99 per gallon, many, like French in Las Vegas, still face prices over $4. I was paying over $4 in Las Vegas back in 2004. So if that gives you kind of any idea of how expensive fuel was on the West Coast back then. And granted, we had the what was going on back then. We had the Iraq War II was just getting kicked off, and which created some price instability, and West Coast gas was expensive. All right. Despite where are we? Despite campaign promises of drill, baby, drill, the author points out that gas is indeed cheaper in real terms when measured against silver or sound money. French reflects on how, in his youth, 25-cent gas wasn't uncommon, and services like attendants checking oil and tires were the norm. Today, most young people don't even recognize pre-1965 quarters, let alone understand the deeper issues of currency devaluation. He argues that the public blames presidents or corporate greed for price increases, ignoring the real culprit, relentless relentless money creation and inflationary monetary policy. French cites Ludwig von Mises, who warned that people confuse inflation, expansion of the money supply, with its consequences, and a general rise in prices as inflation quietly erodes the dollar's value. Many Americans remain oblivious. Meanwhile, the silver market offers a glimpse of reality. Rising silver prices have people selling old coins, jewelry, and flatware to capture their enduring value, something cash increasingly lacks. All right. So, yeah. So, I mean, when you tell people that, the price of, energy and things like that are lower, even though they may still be the same prices they were, say, 4 or 5 years ago, on a per, gallon or kilowatt or whatever. The reason that they're saying it's cheaper now is because gold is and silver are like way up here. And, relatively it's much cheaper, but our dollars have basically just lost that value. So, all right. Well, that's everything that I wanted to ramble on about today. So if anyone needs to get in touch with me, where do you want to go? DSAFinancialGroup.com. All your financial planning needs can be addressed there. Give me a jingle. I'll be glad to help. All right. Well, I hope everyone out there has a wonderful afternoon and evening, and I'll talk to everyone again next time. Adios.